Let's talk about this Trump stock market. It compares quite well, as we just said, at least since Election Day, to others, and fast approaching what would be one of the best years we've seen in terms of at least 1 year of a presidency.
Right. Well, look, I think we have to recognize that the Trump tax reform, tax code changes, I mean, I criticize aspects of it on fairness grounds, but the stock market looks at earnings, and that tax plan was a huge gift to corporate earnings. And I think you've seen it flowed through immediately. It's continuing, and the stock market rise is reflecting that. I mean, I was looking at the valuation measures today. It is an earnings-driven market. The forward PE is sitting kind of squarely on the average. It's not some, bubble-like excess showing up yet at all. And I think that, look, the market either goes up because the multiple goes up or earnings go up. And the multiple hasn't gone up that much. And I think the bottom line is, yeah, earnings are a lot better.
Yeah, it's been interesting how often I'll take a look through an earnings release and you get down to the tax rate, how often it's something like 12%, 13%, even below the 21 or so that sort of we anticipated.
I mean, you can have a fierce argument from a public policy perspective about whether this is really good for the country, but there's no question it is good for shareholders. And I'm sure there are a lot of them watching the show. That has been really a very significant contribution to these big market gains.
Others point to PEG ratios, the price to earnings growth, which at this point is starting to skyrocket higher. I wonder if you think that's a fair metric.
Well, personally, I don't pay that much attention to the PEG. I mean, at some extreme, you begin to start worrying about it. But let's face it, that's, when many of you have growth in their growth projections, even a forward PE, you're putting in assumptions about the future. And at some point, that just starts to be a guess. And I think the collective wisdom in the market is often fallible, we know from history, but I think it's probably as good as gauging that as some arbitrary PEG measure. So I don't put a lot of stock in that.
I think what's been so incredible about it, it's not just tax reform, it's also a significant amount of deregulation that's taking place as well. Meantime, the waging of a trade war on multiple fronts. And it almost begs the question, what's been more important, and I think it probably is showing up in terms of the record runs we're seeing, what's been more important to the market, the deregulation and the tax reform or the trade war?
Well, and I'm throwing in another thing, which
Okay.
I keep harping on, but we don't talk about as much because it isn't as sexy, but the unemployment rate.
Yeah.
I mean, the low unemployment rate, historically low unemployment rate, which is putting money in people's pockets, they haven't had that kind of money, the marginally employed, for a long time, and they're pumping that into the economy. These people spend the money when they get it, and it's not only boosting, retailers, the obvious source of it, but it's plowing through the economy. Consumer spending is, contributing a lot, I think, to this growth. I think that's a very important part of the robust economy and again, the higher earnings. The tariff wars have gotten a lot of media attention, and they are new, and they are interesting. But the absolute numbers involved there are still, I think, relatively insignificant given the size of the overall economy. And I think the stock market has tended to exaggerate the potential impact. I'm not for the tariff wars, but they haven't really cut significantly into company earnings yet.
Yeah, certainly, and or hurt consumers much, certainly at least in the current economy that we have. I think running at the tune of about $7 billion a month. And, of course, December 15th didn't happen. But, Jim, what about the tariffs with Europe? Somebody I think who probably likes French wine occasionally.
Well,
you're paying a lot more for it.
Or Scotch whiskey. My last name was Stewart. Scotch whiskey has been a family tradition for many generations. And, yeah, I mean, everybody's focused on China, but we have a tariff war going on with Europe as well. It's a little bit different. The World Trade Organization ruled that Europe was unfairly subsidizing Airbus and gave the U.S. permission to slap about $7.5 billion in tariffs on European products, which, of course, the tariff-happy Washington, they've jumped on this. So they already put 25% tariffs on some things in October. But now they're ratcheting up to 100%, and this is going to start hitting consumers. Now, you can say what consumers, but it's going to be on all Scotch whiskey, not just single malt that got hit in October. It's going to be on champagne. So if you're planning to have champagne for New Year's, this would be a good time to buy it because it could be twice as expensive next year. France is getting very hard hit. I don't know if that's anything to do with Macron's recent, brush-ups with Trump, but they're hitting cheese, Roquefort cheese, the champagne, which was exempted in October, cognac, all French wine. The Italians are getting hit in this round, even though Italy has nothing to do with Airbus. Spanish olive oil. These are all direct-to-consumer products. And I think at least some people, you could say, oh, well, if you can afford to be drinking a bottle of Scotch whiskey, so what? But nevertheless, it's going to be a shock when you walk into the store next year and a $50 bottle is now $100.
Would you expect that we're going to actually come to some sort of comprehensive trade agreement with Europe next year?
Well,
especially with these tariffs ratcheting up?
I think Trump has certainly been talking about a huge thing with the United Kingdom once they're out of the EU. And I think he would like to, he likes them being independent. He wants to link them more to the U.S. He likes Boris Johnson as best I can tell. And I think he would like to, come up with something dramatic there to kind of reward them for this. But I have to say at the moment that, we're hitting the UK very hard with these 100% tariffs. And so far, there's been no budging on this. Is the EU going to give up these subsidies to Airbus at the rate Boeing is going? Maybe they're not going to need them as much. We'll see. But there ought to be. I mean, this is ridiculous. For our oldest, biggest trading partners, Democratic allies, to be fighting over things like whiskey and champagne. I mean, come on.
I guess some would say, well, then tell the French to get rid of their digital sales tax, right? Their digital tax.
Well, look, Europe has a lot of policies that we could take issue with, but let's tackle those on those grounds. Let's go at the digital tax and say, look, this is in your interest. Let's negotiate in a regular way. I think we have plenty of leverage there. I don't think we need to be like punishing grape growers or, bring it back to Scotland again, whiskey makers and stuff.